Hey folks, Brian Zanatelli with Cinte Mortgage, back again with another edition of Mortgage Questions with Eric Z of the Z Team.
Hey Brian, so good to see you today, and I think we're going to cover some great ground. So, what do you got for me?
So the question today is, with all the news about the Fed and how they're raising interest rates, how does that affect mortgage rates, and what actually drives interest rates?
So, that's a really good question. And what's in the news all the time is the Fed funds rate, which means the rate that banks borrow money from the Fed to make it available. And the Fed funds rate actually affects credit cards, car loans, construction loans, bank centered loans. I actually spoke to my banker this week about a rehab loan for a house I'm thinking about buying and flipping, and I asked him, will the rate start with an 8 or will the rate start with a 9? And he said, we'll start with a 9. And that's due to the Fed funds rate increasing by almost, actually over 5% since they started hiking them. And then banks loan above that number for the bank to make the money they make. In terms of what drives mortgage rates, Brian, and this is, people get so confused about this, they think the Fed's raising rates, mortgage rates are going up. It's always inflation, and inflation got really, really high about 7 or 8 months ago, and the 30-year mortgage rate has always, quote unquote, chased inflation. We had great news on May 10th. We had an encouraging drop in the consumer price index, and inflation has started to come down nicely. The thing that is happening is there's some other blips in the economy, the banking problem that we're having now, that is kind of holding mortgage rates up a little bit, but we're going to continue to get really great news over the next 2 months on the inflation front, which should be really good for mortgage rates. And what will happen when those rates go up is it's going to increase buyer demand by quite a bit, and those buyers are going to come into a market that doesn't have enough inventory for them, which is just going to drive home sales and home prices to stay strong and to do better, which is completely opposite of what the press is telling everybody, that we're going to have this big housing bubble and housing values are going to go down.
That makes perfect sense. So to summarize that, the Fed and the Fed funds rate do not affect mortgage rates. It's actually the inflation, and we're seeing good things on that note.
Yes, you got it exactly. You summarized it really nicely. Thank you.
Thank you. If you guys have any questions or want to look into buying a house or refinancing, please message us, DM us, private message us, or text us below.